been no major changes to the positioning of the trust in the first quarter of 2023. Asia focus is a portfolio of high conviction, smaller companies in Asia, and we don't typically look to trade in and out of stocks very frequently. We have about 56 holdings in the portfolio, which are leaders in their field and have high levels of profitability and typically net cash balance sheets. These companies are small in market cap terms, but again, we feel that they are very strong at what they do. From a positioning perspective, we are pretty diversified by both country and sector. From a country perspective, India is our largest market at around 15% of the portfolio, and China and Hong Kong on a combined basis are also there about 15%. We have had meaningful exposure to Southeast Asia for quite some time, where Indonesia represents the largest market there at about 10%, followed by Malaysia at 8%. From a sector perspective, IT represents over 20% of the portfolio, but that's spread across three large industry groups, namely semiconductors, IT software and services, and IT hardware. So this is a very rich and diverse sector in Asia, given the region's dominance in the tech supply chain and the rise of the digital economy. Elsewhere, in terms of sectors, we don't have any exposure to utilities, and we have comparatively little in the more cyclical sectors, such as materials, where we have 4%. There's been a lot of volatility in markets in 2023, but Asian smaller companies have had a decent start to the year, or a positive start, and the NAV of the trust is up 4.4% in US dollar terms, or 1.7% pound terms. This is largely in line with the reference benchmark, which is the MSCI Asia ex-Japan Smaller Companies Index. It is worth highlighting that we don't really use the index as a starting point for constructing our portfolio, and the trust is very different to any benchmark out there. An indication of this is the fact that our top 10 holdings represent over 30% of the portfolio, but less than 1% of the benchmark. But looking at portfolio in the performance in a little bit more detail, some of the key contributors to performance this quarter have included names such as Park Systems in Korea, which is a company that does imaging technology and sells equipment to the semiconductor industry and biotech industry. It's a company we talked a little bit more in the last update, and given strong performance, that's our largest holding at the moment, over 4%. Another strong performer for us this quarter has been Momo.com, which is the equivalent of Amazon in Taiwan, which is seeing a nice rebound after a weak 2022. It's seeing nice margin expansion as its competitors struggle and they step down investments in logistics. And growth has still been pretty robust, even though it's come off from the pandemic highs. Another stock that has done well for us during the quarter is a company called Scient, which does engineering, research, and design services for industrial clients, particularly in industries such as aerospace, which are seeing a nice recovery. And that contrasts with some other IT services companies in India, which service more the US financial services industry, where you're seeing a bit of a slowdown. So that, Scient has been a good performer for us. On the flip side, we've had poor performance from a company we introduced last year in China called Join Labs, which is being caught up in the growth or rotation out of growth stocks, and it's seeing some slowdown in its pipeline. It's a drug testing business in China, one that's still delivering pretty good results, and we think that it remains very cheap. The other company that continues to perform quite poorly is a Vietnamese property developer called Nam Long, which has been struggling due to a crackdown on speculative activity in Vietnam. But we think that as one of the most reputable developers, they stand to benefit from this over the long term. The main change to the portfolio in the first quarter of 2023 was the introduction of a Chinese company called AutoHome, which is the leading auto portal in China. It's a business listed in Hong Kong. And on the flip side, we exited 4 small holdings, including 2 companies that we invested IPO, one called Nazara Tech, which is a gaming and internet group, where we felt that the corporate structure was becoming a little bit too complex and the growth too reliant on acquisitions. So we decided to spend that capital elsewhere. And Tatvat Chintan, which is a chemicals company, which has had some issues with execution since IPO, given rising raw material prices and slower growth than expected. It's still a very good quality company, but again, one that we felt we didn't want to allocate more capital to and wanted to spend it elsewhere. We exited two more companies, one called Absolute Clean Energy in Thailand and IPH in Australia. One of the holdings that I wanted to highlight is Autohome, which we just introduced in this latest quarter. The company has the leading website and mobile applications for auto-related content in China and has more than 10 million daily active users. It's equivalent of Auto Trader in the UK. And the company, through its website, through its mobile applications, it generates a lot of content for both auto buyers and also auto manufacturers and dealers. And it monetizes this through advertising and subscription-based services to these dealers, as well as facilitating financial transactions, such as insurance and vehicle financing. We like the business as a play on growth of online advertising, as well as these services to manufacturers and dealers in vehicles in China. From a valuation perspective, the company is trading at very attractive levels. If you just look at the cash on balance sheet, that represents over 70% of the company's market cap. So excluding that cash, the core business is trading on something like 6 times price to earnings. And that's against the backdrop of a reopening Chinese economy, as well as potentially lower regulatory scrutiny of Chinese internet businesses. The company used to command a higher market value, but competition did increase, primarily via video form advertising, the likes of TikTok. But we feel that the competitive environment has stabilized, and the company will remain dominant in its space. On top of that, we think that there's new avenues for growth, primarily in servicing or developing a platform for used car sales, which interestingly in China is actually a smaller market than new car sales, and also in electric vehicles, which as you might know, China is the largest EV market globally, where penetration of EVs has already achieved pretty meaningful levels. And as EVs grow, sales are likely to be done more directly rather than via dealership networks. And Autohome is developing solutions for EV sales, such as virtual showrooms and the like, which is a very incipient business, but one that we think that provides further potential upside to the investment case. The other holding that I wanted to bring to life is a very different company, and one that we've held for a long time, probably since inception of the Asia Focus Trust almost 30 years ago. And the company is a bank called OCBC NISP in Indonesia, and it has survived many different cycles in that market, including the Asian financial crisis when many banks went bankrupt for lending to a Suharto dictatorship. And OCBC NISP survived that period, and therefore we feel very comfortable with the company's governance and risk management. Also because it is now controlled by Singapore's OCBC Bank, which again is a bank that we know well and that we trust. What's most attractive perhaps about NISP is that it trades on half of its book value, which compares to other leading or quality banks in Indonesia, which trades north of 2 times or often even close to 5 times book. So clearly NISP is trading at a fraction of its peers, partly due to liquidity reasons, but we feel that level of discount is unwarranted. We believe the companies in the trust provide exposure to a range of themes in Asia, given diversification by both country and sector. This includes rising wealth and aspiration of consumers, increasing health spend as populations age, the rise of the green economy via renewables, and also areas such as industrial automation, which are quite topical at the moment. Underscoring all this, we feel that the portfolio gives you good access to domestic growth in Asia, which, unlike perhaps some of the large cap companies that typically you get exposure to through indices or mainstream equity funds, those large caps are more susceptible to the global macro swings and geopolitics. So we think that smaller companies in Asia do give you niche exposure to very exciting growth opportunities and themes within the region.